Sky-high prices have seen Australia's gold production hit levels not seen for more than 6 years. Prices for the precious metal have stayed high regardless of how much the mining companies can produce. And with the Federal Reserve prepared to pump more money into the US economy, the gold bugs think the price is only going one way, and that's up. Here's Emily Stewart.
Gold is back in vogue and has been reaching historically high prices.
We had something like $5.50 an ounce in the early 2000s. The gold price has been averaging about $1,200 an ounce in Aussie dollars for the last 2 years, so it's double.
And gold bugs are looking to the US Federal Reserve to see if the boom is likely to continue.
We're going to continue to see, the gold price rise as long as the central banks, adopt quantitative easing programs and rather loose monetary policies.
In his latest assessment, the chairman of the Federal Reserve Bank, Ben Bernanke, acknowledged that growth in the US economy is slowing more than expected. In a statement, he said, "We will continue to monitor economic developments closely and to evaluate whether additional monetary easing would be beneficial."
They're looking at unconventional monetary policy as purchases of Treasury securities, which would keep mortgage interest rates low and enable households to engage in further balance sheet repair.
And as the Federal Reserve steers the US economy back from the brink of the global financial crisis, this policy of so-called quantitative easing is not without risk. Analysts say if this policy continues, it could have inflationary implications and will further reinforce the attractiveness of gold.
And I think that, longer term, this is going to be bearish for a lot of the major currencies, the US dollar, the pound, and possibly also the euro, over the longer term. And that will be very good for gold.
I think the issue here is there's a lot of liquidity in the market. There's a lot of cash floating around looking for a return. And at this stage, there's not a lot of obvious candidates, but gold does stand out as having that steady and outperforming characteristic to it, and I think that's drawing support to it.
And Australian gold companies are keen to capture some of those dollars and are ramping up production levels. An industry report has found production for the June quarter reached 67 tonnes, up 20% compared to the same time last year. And that means Australia is now the second largest gold producer in the world after China.
The 245 tonnes that we've just announced for the 2009-10 year, that's worth around $11 billion Australia for this year alone.
Some companies even return to mothballed sites to develop them further.
A whole heap have gone back to old operations, had a look often beneath the old open cuts and are now developing larger open cuts, or in some cases going underground and being able to produce far more gold for the future.
Gold analysts will this week be monitoring a run of US economic data to look for signs of inflation and the slowdown in the economy.
The gold market is very sensitive to the economic releases. I think the US still seems to be the bellwether for the global economy. So any signs of further weakness in that economy will probably flag or trigger safe haven buying, and that's what I think has been driving gold prices the last 6 months.
And analysts predict production and the price of gold are expected to increase over the next year.